Hello, welcome back to this week's market update, the first Monday of February here, February 3rd, 2025. And with that, we will jump right in. We saw the market start last week a little bit lower amid concerns that China was outpacing US technology, particularly with the rollout of DeepSeek, which is a competitor to ChatGPT. Markets recovered a little bit midweek, but then sold off again on Friday as tariffs are expected to be enacted around midnight tonight going into Tuesday morning. As of Friday, January 31st, the Dow Jones Industrial Average was slightly positive, up just about 0.25% last week. The S&P 500 down just about 1% last week. The Nasdaq down even further, about 1.6% for last week. And then the Barclays Aggregate Bond Index actually positive last week as investors flocked to risk off assets amid some of this volatility last week. So overall, a little bit of a choppy week. We might see that bleeding into this week with tariffs rolling out and really impacting companies depending on how long they are held, as well as how countries choose to retaliate. So a lot of unknowns going into this week, which did lead to the sell-off that we saw in the S&P and the Nasdaq last week. Heading into our economic data from last week, we did have the January FOMC meeting on Wednesday of last week. The Federal Reserve chose to go with a pause in the month of January. So we had that 50 basis point cut in September, 25 in November, 25 in December. And now so far in 2025, they are holding steady. So inflation did creep up in the last few months of 2024. We also have the possible impacts of tariffs in the coming months, depending on how long they are held. But as of right now, as we said, tariffs are set to take place on China, Mexico, and Canada this week, ranging from 10 to 25%. And that could have some short-term inflationary impacts, even though it would raise government revenue. It would also hopefully give a boost to US manufacturing. But in the short term, consumers, both domestically and abroad, might see higher prices. So a lot of things that the Fed is aiming to balance here. But with that, we'll keep watching the Fed, keep watching what they say, and look forward to the next meeting in March. Also last week, we got the Q4 real GDP growth data here. You can see real GDP growth came in at an annualized rate of 2.3%, which was slightly below expectations. The majority of the growth was driven by consumer spending, as you can see here, up to nearly 3% growth on an annualized basis there. Government spending also contributed positively to GDP growth as well, and imports slightly here as well, while exports detracted from GDP. Finally, investment had a negative effect on growth, subtracting about 1% from real GDP. So the 2.3% growth rate in the fourth quarter was better than many had anticipated maybe a year and a half ago heading into 2024, but it did fall short of the more recent estimates from economists. So a little bit of a bull bear scenario there. We also saw that this growth rate marked a decline from the 3.1% pace of real GDP growth seen in the third quarter. So overall, a steady quarter of growth, but a little bit slower than we had expected. Also last week, December PCE inflation came in line with expectations, with headline prices rising about 0.3% in the month and core prices rising about 0.2% in the month. On an annual basis, we had core prices increasing about 2.8% here and headline prices a little bit lower at 2.6% annual inflation. A lot of this headline increase was driven by a rise in energy prices. We saw that in November as well. So we have been getting a bit of an uptick in this headline PCE measure as well as the CPI measure since around September. So we'll have to keep watching and seeing if that continues to rise. There's a lot of risks on the horizon, like tariffs, that could cause these inflationary measures to creep up above 3% again. But it's also possible that if tariffs are very short-lived and not impactful, that we could see PCE and other metrics kind of flatline and hopefully decrease in the coming months. So a lot of unknowns as we look forward here, but we'll continue to monitor and watch for updates. Along with the PCE inflation report, we also got December's personal income, spending, and savings data. Personal income rose 0.4% in the month, so a pretty steady gain there. Personal spending rose 0.6% in the month, so that's not unusual for a holiday month there that spending outpaced income just slightly, but that did cause personal saving to drop below 4% to 3.8% in December here. So strong month of income growth, strong month of spending. However, we did see savings drop as a result of that. Last but not least, U.S. consumer confidence declined around 5% in the month of January as optimism about both present and future economic conditions weakened. The decline was primarily driven by consumers under the age of 55, as well as households earning over 125,000 per year. So a very interesting mix of higher income households as well as a younger crowd feeling that the economy is worsening both right now and in the coming months. Despite this drop in January, we do remain in this pretty narrow range that we have been in for several years here, between around a 120 to 80. So if the consumer confidence index continues to trend down below this range that we've been in, that could be a pretty bearish sign, but it just might be a month of mean reversion as it has been in a pretty narrow channel for several years here. So very important to see how it trends in 2025, but this is a good indicator of how consumers are feeling about the economy in the new year so far. With that, we want to thank you so much for tuning in to this week's market update, and we look forward to updating you again next week. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.